Most Asian stocks drifted higher, tracking gains in the technology sector. Hong Kong's Hang Seng Index ending up 0.1%, mainland China's Shanghai Index rising 0.7%, and Japan's Nikkei up in positive territory, up 1.2%. Meanwhile, the Nasdaq and the S&P 500 futures advancing as Nvidia and other chip stocks continue to regain momentum ahead of a key inflation reading this week. Overnight, the Nasdaq rallied U.S. major stock indices at close of business trade after Nvidia and the other tech mega caps boosted, while the Dow Jones slipped as retailers weighed and investors waited for that PCE data that's due on Friday. The S&P 500 overnight gaining 0.3%, Nasdaq rising 1.2%, and the Dow Jones bucking the trend day 0.7% lower. The JSE is trading higher with the all-share index advancing 0.3%. The rand is currently trading at 18 rand 16 to the dollar, 22 rand 97 to the pound, and 19 rand 40 to the euro. Looking at commodities, gold is trading at $2,307, platinum $992 per ounce, while the price of Brent crude is at $85.64 a barrel. To give us perspective on the markets, we are joined by Skulk Low, who is a wealth manager at PSG. Skulk, thank you so much for your time. Given that picture that I've just described in terms of the market moves, what's your sense of global market sentiment as we get closer and closer to that US PCE reading on Friday?
Yeah, good afternoon, Anastasia. It's an interesting market. I must tell you, movements in the market has been, either extreme levels. You were talking about the US markets, PCE levels. I think it's going to be sort of a hurry up and wait scenario. When I look at the current probabilities in terms of rate cuts, expected currently more or less 65% expectation that we're going to see the first cut in September, and most probably 80% probability there in November. So if I look at the market currently, they're definitely becoming a little bit more, let's call it bullish in terms of rate cuts. So that's giving us some insights in terms of the economic forecast. But I must say, market movements, share price movements. Look at these some of these excessive movements in the likes of the Microsofts, the Apples, the Nvidias. I think that's most probably the main topic.
I mentioned in my intro that the rand is trading at around 18.16, so about a third day of weakness. What do you make of the movement so far? If you had to compare it to the week of strength leading up to the inauguration and then where we're currently sitting.
It's sort of the morning after the night before, Anastasia. We had this exuberance of this new government of national unity. I know we were waiting the whole parliament, a new announcement. So I think that'll bring. Remember, the big thing in markets is certainty and uncertainty. Markets don't like uncertainty. Even certainty around bad news is sometimes better than these uncertain times. But I foresee we'll see the answers. There's the announcements coming out soon. Talking about yesterday. We should see 24, 36 hours. So let's see how that happens. But also it's been some dollar strength as well. So I think one should not be solely focusing on the rand.
Okay, so let's talk local financials for a bit, because last week we had Standard Bank giving us a 4-month update. We had Nedbank as well giving us a 5-month update yesterday. In the lead up to the local banks publishing their numbers in about a month or so, what is some of the information you're going to be looking to glean when you go through those particular financials?
Yeah, that's a very, very good question, because currently as we look, if you ask me what do I think about the banks, I think they're still extremely literally dirt cheap. What we've learned out of these updates, Standard Bank gave us insights saying, currently we're still looking at an ROE, return on equity, anything between 17 and 20%. Now, put that in perspective. When I look at the last 15 years, the average, let's call it return on equity for Standard Bank was around about let's call it 14.9, let's round it up, 15% levels. Now for them to say, it's been a tough time. We can see clearly in the banking sector. I mean, we're sitting in an environment where high interest rates. Now banks sometimes, most of the times, they like its interest rates somewhat higher. But I mean, if we look at this high interest rates environment, then the consumer is struggling, some of the businesses are struggling. But still, they managed to produce ROEs of 17 to 20%. Now, when I look at the price to books, when I look at the same 15-year period, the average price to book for something like a Standard Bank has been over 1.5 times. Currently, even at these, let's call it results levels, they're still trading at around about the 1.3 times, which just shows you that despite the fact higher ROEs, they're trading at very, very low multiples. I'm actually looking forward to this. It's one of the sectors that I found extremely interesting, and definitely where I'll be doing some value seeking, if we have more certainty around South Africa and the government.
It's a few days left, and then we're wrapping up the first half of the year, especially when it comes to equities, that is. What's your sense of how the first half has gone? And I suppose also, what are you asking yourself as we get closer to the second half next week?
Oh, that's a great question. Anastasia, I mean, the first half was full of surprises. I mean, you can take a commodity like the gold price. I told you we would have hit the $2,400 levels in the first half of the year. You would have laughed at me at the beginning of the year. What a fantastic surprise that's. Markets, I mean, we went into this year and I pretty much read all the financial reports, international reports, and that I got a sort of a lukewarm feeling towards the S&P 500. I had a lukewarm towards developed markets. Yet here we're sitting, let's call it the MSCI All Country World Index to yesterday's close, over 11% up in dollar terms. So markets has been doing extremely well. So I think that was the surprise. South Africa, I mean, I follow this a little let's call it an ETF comparison, which I do on a weekly basis. And I compare the different country ETFs against each other on a year-to-date basis. Now, South Africa in February on one stage were the third worst performing country, let's call it market or country ETF by a country mile, pun intended. With Friday's close, it moved all the way up and now found itself in the top 15. So again, big movements from South Africa, being a sort of a environment nobody want to invest and really disinvested when you look at the net foreign sellers, even local sellers. Now suddenly that picture has changed, and I would not be surprised if the second half of the year sort of continue this current strength that we've seen.
Unfortunately, we've got about a minute left, and I would have loved to have a conversation with you about valuations in parts of the market and whether you have any concerns about momentum going specifically into tech. But as we wrap up, are there events or, I suppose, call it news that you're looking out for the rest of the week?
Anastasia, are we going to look into this, let's call it the AI, this whole exuberance around. I mean, the last time I've seen this type of movements, and I know we're going to talk about this, just not today, but I mean, the last time we've seen similar scenarios back in the 2000s, the top three companies back then, Microsoft, General Electric, and Cisco Systems, they ran all the way from a top three weight of around about 7% to 11% of the total S&P 500. With Friday's close, the top three companies, again, Microsoft, Apple, and NVIDIA, made up not 11, not 50, now 22% of the S&P 500.
Yeah.
I know that'll be an environment where I'll be looked at, and I would be a little bit worried if I was, in that, overly invested in that environment.
Okay, well, Skulk, we'll leave that conversation for another time. That is Skulk Lowe, who is a wealth manager at PSG, giving us his perspective, not just on local markets, but also where he sees some of the other elements, especially as it relates to the rand going. But we're going to take a quick break. When we come back, we'll have more news, so stay with us.